We're to Turkey now, where consumer confidence has dipped to its lowest level since 2009. It comes after the country's economy was downgraded by two credit agencies at the end of last week. So let's take a closer look at what's been happening. Firstly, on Friday morning, the Turkish central bank announced it was scrapping its monthly meeting and will now hold just 8 a year. Later in the day, Turkey's economy was downgraded by credit rating agencies Standard & Poor's and Fitch. On Monday, January's economic consumer confidence fell to its lowest level in 8 years, dropping by nearly 4% compared to last month. However, the glut of disappointing economic news has had little effect on the lira, which has remained relatively unchanged, suggesting most of the gloomy news was already priced in. Well, Hatice Karahan joins me in the studio now. She's an economist at the Sita Foundation in Istanbul. Thank you very much for joining us.
Thanks for having me.
The economic confidence index is down. What can be done about it?
The economic confidence index has marked a decrease in January, and the decrease of interest seems to stem from the declines in the construction, the real sector, the services and the real trade sub-indices. And on the other hand, while looked in terms of levels, the real sector confidence index seems to be still on the positive side, while the rest, including the consumer confidence, looks pessimistic. This outlook mainly represents the slowness, the general slowness in the economy, and is augmented by the uncertainties shaped around, the domestic political developments and geopolitical risks. And so aside from the recent actions of the government to support the domestic economy, how soon these uncertainties will disappear or weaken will matter for the confidence in the Turkish economy.
We talk about the uncertainty, and also we've had these downgradings. Why has the lira managed to hold up?
For that loose market reaction, I believe that in this story, the reaction has been weak since the downgrade decision had already been priced in. And all the adverse developments in recent months had been, had let the markets down already. And also, the earlier examples of downgrades in some peer countries reveal some similar reactions, some limited downward pressures on the market. So it's not weird what we are observing right now in the Turkish market.
And what's behind this decision by the central bank to stop meeting monthly and only meet 8 times a year? Surely they should be meeting more, not less, during these sort of crisis-ridden times.
Actually, this move is compatible with international practice, as many advanced countries organize their monetary policy committee meetings 8 times a year. That's what the Turkish central bank has decided lately. Plus, the main dynamic behind this decision seems to, have more effective monetary policy responses because a lower number of meetings are expected to translate into a bigger, a more comprehensive data set to analyze, which will help the central bank focus on key trends rather than short-term volatilities.
Okay, thank you, Hatice Karahan. Thank you very much for joining us.